Good afternoon, everybody. Also welcome for the students in management science and ethics philosophy of the ULB, Sylvester School. I would like to introduce you the panelists for today. On my left side, you see it's Paul Jorion. He's an anthropologist and an expert in financial markets. Then we see Bruno Colmant. He's doctor in applied economics, professor at Vlerik and UCL, and member of the Royal Academy of Belgium. This is Benoît Verwilghen. He's vice CEO and CFO of Ethias. On my right side, Francis Colaris. He's COO and member of the board of BMV Insurances, Vivium and Actel, and he's currently in charge of life and non-life business. And the last panelist is Marek Hudon. He's professor at the Solvay Brussels School of Economics and Management at the ULB, and is also co-director of the Center for European Research in Microfinance. Welcome, panelists. Today we talk about the redistribution of wealth, and we shall apply the subjects on a very actual theme, that's of course Cyprus. Yesterday evening, Karel de Gucht, Commissioner for European Commission for Trade, he said that the redistribution of newly created wealth is not an ethical obligation because it can be justified on the basis of personal effort, for example. But at the same time, he said we should not ignore inequality. Do we agree with Karel de Gucht? It's not an obligation, but we should not ignore it.
Can I answer?
Yes.
Yeah. I think he's totally right, because he said also, I think that everybody has the same opportunity in the beginning to start with the same opportunity, but what are you doing with the opportunity? That's all the question. So if you don't take the opportunity, you will never get there where somebody else who took the opportunity will or could arrive. So I think there is a certain nuance to get to there, but at the beginning, I think everybody has the same opportunity. If we can start from that point of view, we must be able, if we do the efforts, to get there where we want to get. I think he also referred to Aristotle, who said what happiness, or that happiness was the ultimate goal, the ultimate good. I want to paraphrase that. I think it's right to say if you want to be successful, make the other one successful, and then everybody will be successful. And I think that is what happened now in Europe. Our politicians are not speaking in one way and as a nation as a whole. And that's the big problem. If everybody wants to go in the same direction, well, we will go in the same direction. But the egos are too high. That's the problem.
Some remarks?
I think it's more serious than that. I think we're heading towards very serious social issues that will oppose labor and capital. And what we see happening in Europe nowadays, you know, with this issue of public debt that we are unable to reimburse, the issue of money, the concept of money, the symbol of money being at stake in some countries, the issue of inequalities means that we have been unable to solve the good equation in Europe. And I'm personally worried with the coming years, because I think there will be social rebellion, I would say, against the richer people. There will be the need to reshare wealth. And my intuition, and to some extent I think that Paul would make the same statement, is that money itself would be the adjustment factor. That they will have some change to be brought to the concept of money in order to redistribute wealth across the people. Because one should never forget that money is the same as labor being accumulated in a note, which means that if accumulated labor is confined with a limited number of people, whereas the people effectively working cannot find a job, then there is some issue between the supply of work, the labor supply of people being in the active population, and the people who have saved labor from the past in money. And so there will be some ideological struggle between the two. Yeah, I think the best author, and honestly I'm more a liberal guy than anything, but I think the guy who explained this the most clearly was Karl Marx. He explained that some point in time there is a unity of concept unity between money and labor, and that there is the adjustment factor.
You both spoke about Europe, but it's more maybe an issue of a worldwide problem, also outside Europe. And Karel de Gucht said also yesterday that inequality is maybe a threat for world peace. Do we agree with that? That the kind of inequality is a threat for world peace?
Yes, of course. Inequality is in a lot of countries the cause of social unrest, and it could harm indeed peace. We have seen this in the past.
At least what we see from the academic side, there's an emerging literature on all this story of happiness, economics, and so on. And what we considered before, like equality was just a side variable, has become today a central concern. I believe there are maybe we can see more and more that there are relationship between inequality and a lot of important variables such as happiness, but such as health also, such as well-being of the people. So that's why probably it's true that if you really want to change and to have a successful society, to use the term used, maybe then this question of inequality could be taken more seriously than before. Meaning that it's not just the sideline, and for instance in a country like India, you're talking about worldwide stories, in a country like India you had a lot of people, very famous and economists, arguing that, for instance, the inequality was totally not a problem. That the most important element was just the global GDP of the country increasing, and the fact or the distribution of this global GDP would not be a problem because there would be some trickle down, and you know the poorest would benefit at the end of the day from this increasing income of wealth created. Well, currently probably we see that if we don't focus more, or if we don't put more emphasis on this objective of inequality, then it could be difficult, and I agree with Bruno Colmant that we're going to face some issues, social issues, if we don't go more directly into inequality and don't expect that at the end of the day there'll be programs or trickle down or all these effects that could benefit to the rest of the society.
Mm-hmm. On the same time, Karel de Gucht, he said it's important not to destroy the motivation for personal effort. Is it true?
Can you say it again?
That it's important not to destroy the motivation for the personal effort.
Yeah, but this is he's so perfectly right. My question to him and to many people would be, what is Europe doing since 4 years ago? You know, nothing. To some extent, we are at the end of the world today. Now it's nice to make claims like inequalities and all these things, but you see that since the start of the sovereign crisis 4 years ago, 5 years ago, nothing has been achieved on political grounds, nothing. The only adjustment that took place was to monetize the debt away in order to create more money, in order to make the refinancing of governments more fluid and more accessible. But basically, I hear all the people talking about inequalities, more fiscal and budget union and all these things, but nothing has happened. So to me, the reality of Europe is that Europe is not being created, it is destroying itself. What we see in Cyprus happening is that we are threatening these people to be expelled from the euro, which is unthinkable. And so the time has come, and I think it will not, unfortunately, come a wise way, to rethink the social equation and the inequality equation. And I suspect that, and again, and there are many people in the room who knows me, I'm really considered like a rightist guy, but I think there will be some kind of social shock that will force the adjustment. Because the claims are nice, but if they are not translated into specific actions, what's the point? I don't see.
Yeah, let's focus on Cyprus. European Union will show solidarity with the people of Cyprus, but not with the deposit of the non-residents. Let's think about the dirty money of the Russian people. So, is this a good choice of the European Union? To show solidarity?
My opinion is that we are making the biggest mistake we can with Cyprus. So if there was one mistake, we all know that in Europe, sovereign debt will suffer a haircut of about 30%. We all know that public debt are too high, and that a normal, I would say, a timely reimbursement will not happen, because there's no reason to think that growth will soon come back. And in addition, there is some kind of inequality between the generations, because we are throwing away our own debt on the next generations, who will at some point in time push back on the reimbursement, because they will tell us, why the hell are we obliged to maintain your purchasing power of your money, whereas we have to repay the debt. And so there was one mistake not to be made, that was to threaten people with their bank deposits, because if you attack the symbol of money, then it means that you are ready that you show that the ultimate symbol of a market economy is being destroyed. We know it has to happen. We know that money has to be deflated. We know, because money is the same as public debt, and we know that we have to decrease the purchasing power of money. But the way it has been made in Cyprus is a catastrophe, because it means that although it could have happened a wise way, I would say through more nationalization or organized default or things like that, we are hurting the people. So I think that there will be a pre and a post-Cyprus in the sovereign crisis. And I'm totally flabbergasted by the way this is handled, because after 2 or 3 days, the banks are still closed, people are extremely afraid, and this will give the example that although we have fought since 4 years ago in order to achieve a little bit of something, we are destroying it almost overnight. So I'm, as an economist, as a university professor, as there are the people in the room here, I'm worried when I see that.
Mm-hmm. Do we agree with Mr. Colmant that destroying that symbol of depository guarantee is dangerous?
Because it can harm the trust of clients in the banks, and you can fear about consequences of other countries in South Europe of this attitude, of course. But yes, this is a problem. I think this is the main problem with this measure. And one of the impressions that this gives when you see how this has been decided and how this is still discussed, you have sometimes the impression that this discussion has been taken overnight, perhaps too late and too quickly, and probably not well enough discussed and tackled on possibility to realize in fact, and not handling or not preparing for the consequences.
I agree totally with what Bruno said, because I think if you are arguing that you had to tax wealth that is already there, you must do it. I think everybody is ready to pay some tax, but there is an inequality in the tax while it is applied in Europe, and that's the problem. I think if you have a unified nation and everywhere it's the same, you will not have this type of problems. But now the paradigm is changing, and the paradigm is changing because the last I think the last walls of what we constructed as wealth are striking down, and that's a danger. So if we don't make the necessary efforts to reshape the wealth we constructed, well, we will step down and we will have to rethink about the social welfare.
Okay. Otherwise, you can say Cyprus could do other things. For example, they could raise the company tax. It's lower than in the rest of the Eurozone, but they want to do this because then they're less attractive than in the present. Is it normal that we are that we show solidarity with Cyprus?
Paul Jorion spoke about the tax havens, and you see where there's a tax haven, there is a problem. The last 5-6 years, that is what occurred. So I think the uniformization of some some system, some tax system, will be welcome, because it will make all these inequalities disappear, and everybody would have the same appliance to fulfill. I think it would be much better to work on that way, and so everybody is going in the same way. But these are the inequalities of today.
Okay. I repeat my question. Yeah. Okay. Yes.
And just to follow up on this issue, at the same time, I think it was in UK, if I understood correctly, what's going on in the press. Like, you have the same decision that in UK, they're going to be higher, like fiscal competition or fiscal shock this morning, if I understood correctly from my radio. So we have, I mean, like you said, it could make sense in a country like Cyprus that you either increase some tasks but then we have no coordination. We've been talking about coordination for ages, at least to have some common grounds in terms of social system, fiscal system would be, and all this cooperation could be beneficial to the whole community as long as we are all together in terms of money issues and so on, while the system is probably not going into this direction, since we see that you have a few countries talking about the opposite, like this fiscal shock just once, decreasing some level of taxation or improving or I mean, let's say taxation or improving other situations. So there is like this element, and which makes it a little bit unbelievable when we know, like Paul Jorion explained us, that this situation in Cyprus was, I mean, it's not like it happened overnight. I mean, people knew that, people knew the situation of the Russian accounts, and I agree with what has been said, that these are things that could have been predicted. Imagine the reaction from Russia, and so on. So this is really surprising from outside. Of course, I mean, I'm not in politics, so I don't know how it could have been decided and done differently. And it's easier to complain rather than do. But it looks really strange. And when we know that trust and predictability are central issues for citizens in terms of well-being, or more generally for the community, I mean, for sure, it's a major issue today, I guess.
But when the Germans say we don't want to pay for the Russian deposit, the dirty money of the Russians, what do you think about that?
That's a very tricky one.
I think what happens is that, as I mentioned in the lecture, everybody's much prepared to blame the tax havens, which his country is not linked to, in a very narrow manner. Then we say, okay, let's punish the people probably putting the dirty money in the system, and so on. But as soon as that's the case, there's some realization, as was in the news this morning, that it's not only people trying to escape tax or put dirty money into the system by laundering in that way. There's a lot of government-linked bodies who go through these tax havens too. And Russia says, well, it's not only the illegal part of our system, it's part of the legal system also, which is linked in that way. There was a report last week about French banks and how much of their business is going through tax havens. And you see, it's one of those graphs where you have to break it down, because you can't put all the figures, the small figures, at the same time as the big ones, and you have to propose, like a line that kind of shaken in the middle for showing that it's much longer. When you look at the business of Fortis, from BNP Paribas, of Société Générale, from Crédit Agricole, you see a large part of their activities. And you know how close in France banks are to government to some extent, and you see that a lot of their business is just going through there. So, and you know also, if we go into a wider context, that the British, they lost their colonies, but if you look at their presence in the world, the way it's been divided, the money flows, the cash flows are still the same as they were before there were independence of these countries. Why? Because it goes through the money circulates through the actual empire based on the Cayman Islands, on Jersey, Guernsey, Isle of Man, the City of London, and so on. There's a system which is visible on the surface, and then the actual working of the financial streams. And what happens in that statement from Russia is to say, hey, listen, there's not only the visible part, there's also the invisible part, and you Europeans, you should know that. What was mentioned this morning by Mr. Medvedev is maybe we can reconsider, how much of our reserves are in euro or not, threatening, saying, we are all on the same boat. And I think that's what I was mentioning, saying that in times of crisis, like Galbraith said, the system as it actually works becomes more visible. It's not that we're moving into a different operation of the system, it's just the way it works comes to the surface.
The whole approach of the euro crisis is balancing between solidarity and responsibility, personal effort. Is that a good approach? What happened the last 2-3 years, solving the problems of the euro crisis?
I think the main thing is to say that we need solidarity in our economy, in our countries, in our environment. I think the redistribution of the new wealth is a fact that must occur, but the way in which our politicians and European politicians are coping with the problem is totally incorrect or totally inappropriate, and that's a problem. That's what Bruno Colmant said in the beginning. I think we are already 4 years or 5 years in this matter, and no real action happened. It took 3-4 years to solve the problem to cope with the problem of Greece. Cyprus, we know it already 1 year, and nothing happens. And now in an overnight decision, you do it like that. Well, it's not the right way to do it. So the paradigm has to change. But that's a problem.
Yeah.
Okay. I think this question
should speak closer to the mic.
To the microphone.
This question of solidarity, responsibility, I think this is crossing politics the last 200, perhaps 300 years, I don't know. But what this this case of Cyprus, like this was one of Greece, is a lack of governance in Europe. We have a Eurozone, we have no Euro government, and when 17 ministers or presidents come together, they defend 17 countries. Europe has a ridiculous budget that has been cut a couple of months ago. So we have put together our monetary policy. We didn't put together a serious part of our budget policy, and we have a decision-making or a governance problem. And I think this gives the last episodes that we have seen in Greece and then Cyprus, or Italy or other countries, that is, not every country is handled the same way. And this comes back to ethical, but everybody should be handled in the same way. We speak now about dirty money in Cyprus. A couple of years ago, Germans didn't want to pay for Greece because they are lazy. Well, they should be lazy. So it is not correct. It is not a way to help Europe go forward. I think if we have to deal in the future with this kind of events, we need to have a real governance on European level and also real middle to handle this type of case. And this is not the case at this moment. And what we face now, I also read the reaction of Barack Obama on the decision in Europe. So this is a big difference between Europe and between the United States. There is no solidarity between states. There is no governance on the top level. And this makes a huge difference. If you see the course of Europe and the course of the United States in the last 5 years, the crisis started in the United States, but the United States is going to be better, and Europe is now in some big troubles.
Mm-hmm. If you look at history, the US are already one nation for more than 200 years. We started only some 20, 15, 25 years in Europe. And the problem is that we have in Europe our past, our historical past, every nation on its own. Now becoming one nation is very difficult. You cannot achieve that in one generation probably. And maybe we go too fast, but the needs are there. So I think we need one leader. There is not one leader today in Europe. There are 25 leaders.
I would tend to agree with that. My intuition, and it may shock some people here, is that since we've been at war against each other, you know, for 2,000 years in Europe, it will take more than 1 or 2 generations to deal with the new parameters. And I suspect even that we can put together no more than, I would say, 20% of our DNA, something like that. We can put together 20% of our day-to-day life, but no more than that. Or if we go farther than that, we should do it in a progressive way. And why is it so? Because we speak different languages. We live in industrial or agriculture countries, Protestant, Catholic countries, so we are very different from each other. So I think a mistake we made with the euro was to go too far, almost overnight, by not putting 20% of our monetary DNA, but 100% overnight together. And we could have confined it maybe to a limited number of people, but we put too many different countries with the euro. So this is very tricky because we try to harmonize people using a monetary symbol, whereas in the real economy, people are as different as they were 20 years ago or 30 years ago. So it's ambiguous. And what I fear is that by implementing the euro, which was, I think, totally justified for a limited number of countries, we are forcing weaker economies, wherein the euro is inappropriate or unsustainable, to find another exit route than money itself in order to cope with the lack of competitiveness or in order to adjust their own economy. And so what will be this exit route? I suspect it will be a social shock. And to me, what happened in Cyprus is, if you take a microscope, exactly what we may observe 5 years down the road with bigger countries, like forcing a country to reimburse with a strong currency its own debt, whereas it's a weak country, and it will probably lead to social shock. Because what could happen in Cyprus in the coming weeks, if they are expelled from the euro, if for some reason they have to default, there will be hyperinflation. Some, I would say, military issues will be raised because you need to ensure social order in a country, and social order always prevails on monetary order. And so we are maybe experiencing the worst that we could have thought of some years back. Maybe because we try to use money as a tool to align people, whereas they are so different from each other. So we have to achieve peace, but not with one monetary symbol.
Mm-hmm. Some remarks?
The economy levels are very different from country to country. So you have 2 or 3 different levels if you compare them together. And that's, I think we have to do it progressively, but we want to do it too rapidly, probably for all these weaker countries. So they have to get used with it, but we have to look much more or much better before they came. They are introduced in the Euro countries, what they are capable to do and at which level and how they can react on that in which time. So doing that all overnight is not the solution. Mm-hmm. There is also another problem of different nations. That is, and I want to be very positive about that. I think the history of all nations on their own had to remain, but have also to be assessed to the European history. And so abandon your sovereignty is also very difficult to do in such a short time. Mm-hmm. And that's also inappropriate to think that you can do that in a few years. But let's think positive. We can get there, but we will need more time, I think, than we think in the beginning, or than we thought in the beginning.
Okay.
Just to reinforce and what was said about money issues, I also believe that, in fact, the monetary policy, I mean, we know the situation, one money for different economic situations, it's difficult and so on. But, and probably there are a lot of people thinking about these issues currently. Since a few years, since the financial crisis, it was done before, and of course, Paul Jorion has been a leading scholar on this issue, but I feel and I hear that it's a raising issue. And probably, I mean, we need more resilience, we need more stability in the system. The money issue is, of course, part of the equation. It's not everything. I mean, there's a global economic system, and the money issue is one element. But it's one sensitive element. I mean, I've been working on it for a few years, and I can tell you that it's an extremely sensitive element. The question of money creation, the question of course, related to the banks, and it has been underlined by scholars, but it's not kind of a mainstream thinking today to question this element. I know that in the US there are people thinking about this issue, the role of the different actors, what could be the role of the government related to that. I mean, we've been scared about it for ages because of risk of populist policy, let's say, the risk of inflation and so on. We know all this story, but still, I mean, I believe that if we try to rethink about this issue, maybe from a less ideological perspective also than before, that there is something in the money creation that could be used for stability of the system and for more resilience. And that's what we need today. I mean, we need to have systems of checks and balance. We need to have systems, and that's something to do, and it's definitely something difficult to do. I mean, when we know all the resistance that you can face on this issue, and it could be done at the local level, it could be done at different levels, but I strongly believe that's one way at least. It's not the only way, but that's one way at least to go.
I see that you're not lucky with the approach of the European Union to solve the euro crisis, but what do you think of Mario Draghi, the president of the European Central Bank, the ECB? He always hesitated to intervene, for example, in Spain, Italy, because he wanted to put pressure on the politicians. Can we understand that he was hesitating? He was hesitating, not anymore maybe, lost since summer, but it's difficult. It's balancing between that, so also, again, solidarity, but again, also personal effort.
I think there is no problem of solidarity. Everybody wants to redistribute this wealth, but the problem is that to get to this solidarity, you are to be sure that the right measures will be taken in that specific country. And probably what we observe is that some of these countries are not capable today to manage that. So they need to be managed by others to show them how they have to do it. But maybe it's already too late for somebody, or for some countries, because we put their money in it through the European system already for some years, and we thought they could manage it. But we have to realize today they couldn't. So it's normal that the Germans react and say, okay, now we will manage it for them. And that's the whole thing. And I think the decisions Draghi took were some right decision at that moment, but they are not sufficient. I think there is a huge effort to do for many years probably. And that's where we have to go, and everybody has to go. But you don't have to push it too far, too fast, because otherwise the whole system explodes. Mm-hmm. So it's finding the right equilibrium between the measures to be taken and the influence of the measures that will have a positive effect on the long term.
Paul Giron?
I would say that in the same way that we've known for years what was Cyprus, and we still wanted Cyprus to be within the system, the same for Greece. There's been a lot of pressure for Greece to get into the Euro system. It was known through from the Eurostat people that some statistics were fake, and when you speak to them, they tell about pressure coming from high up, that Greece needed to come into the system because it was a symbol of Europe. You couldn't think about making a Europe zone around the euro and not have Greece because it's a symbol of the whole culture of civilization of Europe and so on. It is said often now that most people didn't know about that fake swap that was put together by Goldman Sachs in order to shift a lot of the Greek debt into the future. But at the same time, there was an article at the time in Risk Magazine about that particular swap. It was visible to everybody, and within the system where the authorities were making the decision, it was known that swap was arranged in order for the figures to look the way they had to be in order to get in the system. But I think it was yesterday also that it was mentioned that if some of the rules were applied, core countries like Belgium would not have been part of the system either, because none of these rules that had been set together has been the criteria applied to all. The best candidates were not meeting the conditions. Actually, no nation was ready in order to get into the system, and that's the issue, because where do you start then? When do you start? Maybe the whole idea, maybe we should have, stay with the EQ and not try to move on from there, especially since there was no real effort being made in order to make any unification of the fiscal system in that. There is still, I mean, you can still hear Monsieur Arnaud say, if you say this to me, Monsieur Hollande, I move 300 kilometers, I move and live in Uccle and so on. And when the question is raised within the European Parliament, what do we do about that? There's a big silence because nothing is being done right now in order to solve even, I would say, such stupid issues that you can take Thalys and get out from one system into another within the Schengen space. We haven't, I mean, I always think of that remark from my father was involved with the early stages of this, saying we're making this for the traders and we not make for the merchants, as he would say, and we're not dealing with any of the other aspects of the issue.
What do we do then with the other structural problem of the euro? For example, that for a weaker country, it's difficult to be more competitive because it cannot devaluate anymore the currency. That's a structural problem.
Yes, it's quite difficult because we know if we had been in a gold standard, we know what we would have done. That was to change the conversion rate of gold into a domestic currency. Today we have to depreciate the money itself, while we cannot change the money itself. So it's quite puzzling. So I think that there are two routes to be considered, but of course they will create some disruption. And also I want to emphasize one thing, is that the money, the stock of money itself mirrors the stock of public debt, because public debt, sovereign debt, is supposed to have the same value as money itself. So if I give you a public bond of €1,000, it should be worth €1,000. So there cannot be a debundling between the two. So one has to consider together the concept of money itself, reflecting the ability of money to repay public debt. So I see two routes. The first one would be to expand money supply. That is to dilute public debt into a flood of money, assuming that people would not accumulate money like in the so-called liquidity trap of Keynes, and assuming that the velocity of money will remain reasonable, then there would be inflation, a wave of inflation to dilute public debt. Okay, that's one route. Paul told me in January when we had dinner together that he thought, and I suspect he's right, that we won't have time enough to go for inflation. The other solution, in order to avoid an overall default, is to get more intimacy between banks, insurance companies, and the governments. That is to make sure that public savings or retail savings are channeled through the banks and insurance companies in order to finance the government themselves, as it is happening nowadays. That is a technical, because it's not a legal, it's a technical nationalization of the banking and the insurance sector. I think it's already happening nowadays. And because we see that the asset management of financial institutions is not as free as it was before, and many mistakes were made in the past. So rightfully so, banks are more prudent than before. But so I would see, I call that, but some people are too young in the room here to remember that. I call that the Three Mice Island syndrome. You know, in 79 in the US, there was a fear of the so-called Chinese syndrome that the heart of an atomic reactor, you know, a nuclear reactor, would melt down and go to China because it was the other side of the world. So I see more a kind of merge, but I cannot precisely qualify how and where it will happen between all the financial institutions. And a good example of that is again Cyprus, because an hour ago they announced that they would capture the savings at pension funds. So they will use the reserves, which belongs to the private property, the private sphere of the economy. The Cyprus authorities will capture the counterparty. Instead of taxing the deposit, they will confiscate the counterparty of these deposits in the form of pension fund or asset, or assets of maybe some kind of insurance companies, in order to repay public debt. So I see the solution as being money creation on the one hand, and some kind of alignment, let's call that alignment, between the financial sector and the government. In other words, one will not be able to say that banks and insurance companies are away from the public sphere, because they will need to contribute with our own savings to the solving of the monetary equation. So we will be forced to go for more solidarity, whether we like it or not, through the channeling of our own savings.
It's already what is happening for a part of it, because if you look at the last 3-4 years, for example, the Belgian insurance companies invested much more in Belgian government paper than they did before. So you have, in fact, a certain nationalism that was again installed, and de-Europeization de facto. Another way maybe to achieve the things is that you have one money, the euro, but if you see the interest rates between the different countries, they are not the same. So implicitly, you have already differences in, well, inflation through that mechanism. And I think today creating inflation is probably very difficult to do, because we first need some growth, and then you can create inflation. And that's one of the very tricky things today is that the ECB is maintaining the interest rates very low to get a restart of the economy, but the restart of the economy is not occurring at this time. And as long as this is not the case, well, probably you will have artificial low interest rate, but it's artificial because other parts of the world are growing, but we not. So implicitly we are distracting some wealth, some own wealth.
Some remarks?
I mean, of course, I'm less specialized in finance than the experts we have. But of course, what is interesting for me from an ethical background is the ethical perspective on these different solutions, of course. And these are not ethically neutral. All these different financial solutions, have some winners, some losers in the system, and so on. And that's probably something which makes these discussions complicated when we talk less between experts and more with citizens, of course, is the underlying impacts that all these different policies, we talk about inflation, we talk about the links between banks and government, and of course it makes sense, I mean, from an external perspective that there are links, I mean, that when we back up, then when we bail out some banks, that there may be some kind of requirements, and I was surprised, like many, that there were less requirements when we did that at the time of the financial crisis. But that's, but basically, my feeling is that, I mean, we're talking about wealth and redistribution. The problem is that we have different governments, of course, and we have totally different views about what is the ethical or fair distribution. And just, I mean, from one perspective, some people see that the good or the fair distribution is related to the needs. The other ones say no. I mean, as long as you have different citizens, they all have to pay equal. The other one said, no, it's a question of contribution. They made the problem, so they are supposed to pay for it. So the problem is basically the fact that we have different views, and as long as there is one leader deciding, then okay, at least there is some compromise. But when we have 25 leaders with different views about fairness and about what's the ethical redistribution, and thus the ethical way to impose the burdens also that will be requested at this time, then we get into trouble, and we get to this mixed result, or the famous very long meetings of the governments, which came up to what we've been criticized. So that's probably the big challenge, is the fact that we try to unify not only the monetary issue, but also the views that we could have about where to go in terms of redistribution also.
A concrete ethical question. That 5 billion extra that Cyprus needs now, it's only 17 euro for each citizen in the Eurozone. Only 17. What do you think?
You know, we use exactly the same. I mean, I'm also working in development cooperation every year to say, you know, it's just how many euros and euros, and I'm a little bit skeptical about this kind of explanation, because, I mean, you can try to cut the pie in different pieces and resolve the costs, but it's true that at the end of the day you could say, okay, I mean, to some extent they could be, I mean, a lot more could be done. I mean, to some extent, my feeling is that from a personal and citizen perspective, yes, but cutting, I mean, and using these kind of figures is probably frequently misleading, because it just takes one side of the story without the rest.
I think it's not about 17 euros. I think in Germany the issue is next election. It's not about 17 euros. This is the problem of Mrs. Merkel, I think. And then we come back to the governance issue that we lack in Europe to take decision in this kind of problems.
Okay. You always hear that the financial sector in Cyprus was too big for the local economy for Cyprus. But is it an axioma that the financial sector can be too big for a country? For example, Paul Gérion said also that in Luxembourg it's 20 times bigger than the Luxembourg economy.
No. Bruno says to me, he hushes, he says, I don't know the answer to that question, and I don't either. That's why I was not too keen to get the microphone. We see what happens when the, let's say take a caricature of an example, Iceland. Okay, you make these calculations, like you said, okay, and you see how much every person in Iceland would have had to pay in order to reimburse what was lost, and you get something like 5,000 euros, and then at that point you say, well, this is too big. There's no way we can actually have that being repaid. But that's only because we now consider that maybe the taxpayer is responsible to whatever has been happening in the in the banks. If you take, let's say, the example of Dexia, well, Dexia through FSA has been issuing credit default swaps on a lot of things that could have gone really, really wrong. These decisions were made, and it was mentioned yesterday by Mr. De Geurt, who was talking about the history of Dexia, and he says, well, I see two periods. There's one period where you're running a good business, and then there's a period where people get really just in a greed mode, and then you think, okay, we're going to make much more money. Let me give you an example which is quite interesting about these monolines. So FSA, which became an important part of Dexia, that's what it was doing. And what these monolines were doing, they were calculating that the risk associated to any of these things they were insured, they were calculating that they could actually calculate the premium they were charging to being about 1/3 of what the market was assessing the risk was. So when you look at something like this, you think, okay, why should there be two prices on the market for the same risk? And why would part of a major Belgian bank assume that the risk was 1/3 of what the market was assessing? But the issue with this is if you think there's something wrong about that, there's no place you can turn to raise the issue. I'm often asked about, the head of, let's say, Countrywide or the head of IndyMac. Let's imagine that the heads of these companies I worked for, that Mr. Mike Perry or Mr. Angelo Musillo would have thought we should be whistleblowers ourselves. Let's say something that's really wrong in our own industry. They would have gone to Mr. Greenspan, who had said, well, I trust the invisible hand, like he did when Mr. Gramlich came to tell him that, and that would have been it, because we got so, suspicious about any planned economies. We assigned the idea of forethought, of thinking what would happen in the future as being something which was for some way really Sovietic in the way of approaching things, and we stopped thinking about the global picture. We stopped having a global image of what was going on. We didn't have any place where the macroeconomy could be discussed, and so the actors had no place to turn really to say there's something, I can see something really wrong going on. I was part of the people writing the reports that would go to Mr. Mike Perry or Mr. Angelo Musillo, and once it got to him, he had nobody to pass it on because it was not part of the system anymore.
I have an opinion on that. I think there is no real link between the importance of the bank system and the importance of the GDP of a country, but the question is, what do the banks do with that money? And that's the whole thing, because if you see in all the bank systems where the volume was so big, well, after some years, there was mostly a real estate bubble because they were investing in real estate where prices were too high. Local people couldn't afford themselves to buy anything in real estate, and it's in fact money is coming probably much more from abroad that provokes that than money that comes from your own local wealth, and therefore I think the redistribution can only be done on an ethical way if you have the same rules, or nearly the same rules everywhere. And so you will not have this disequilibrium between the local wealth and in fact wealth coming from abroad.
Okay. What do you think? What is a good solution now for the following days for Cyprus? What can Europe do better?
I would say that you can expect a loan, hopefully, to be granted to Cyprus at European level, as it happened with many countries, because Cyprus is nothing compared to the help that was granted to Greece and other countries. Because we are, you know, it makes me think of the guy of the Schrumpf, you know, the say in Dutch?
Smurf.
The Smurf, huh? You know, the guy, you know, the joking Smurf who opened his box, you know, and he gets the explosion on his face. I think that we are experiencing what will happen if we don't help these people on monetary grounds. We'll see a social shock. I would be really interested to see what's happening in Cyprus nowadays, you know, with the people having their banks closed, you know, money has to be brought for the English servicemen in Cyprus. So I think that a loan is the only solution. And I'm surprised to read that some people at the EU level are threatening an exit of the Eurozone. Because if you do so, it's as if you would import hyperinflation, and then everybody gets ruined. So I think we are telling these people, either you accept our conditions or it will be worse. But, you know, is it a way to handle a crisis? I don't think so.
Okay. So an exit out of the Eurozone is not an option?
Probably it would be worse, because they are not capable to solve it themselves. And it would not be good for the Eurozone too. So their solidarity is necessary. But not on any price. There must be, because imagine today that here in Belgium you are saying, okay, you can get your money or you pay 6% tax. We pay already tax. In Cyprus they didn't pay tax. So, but from one day to the other, they have to pay tax. That's a social shock. So be ready to do that. Be ready to improve the system, but not doing it that way. Then you provoke a social shock.
Okay. Yeah. Thank you.
I think there's one thing we are suddenly realizing. We always have that representation. Okay, tax haven, it's something peripheral. It's there. It's a bit like, you know, like you were having a merchant fleet going through the world, but there were some pirates here and there, and while pirates, you had to deal with that. But it was not a main issue. But what we see now, let's imagine, you know, that image is attached from now on to Cyprus, that your money is not safe in a tax haven. When you realize that 65%, I think that's a figure of the money in the world, is in these tax havens. What if all these people who put money there get into the view that your money is not safe in a tax haven anymore? Then that contagion that will happen there, I think that the effect, and I was joking about it at lunchtime in a little blog that I wrote, I said, that would show Lehman Brothers to dwarf in comparison, because what you do with the money you're hiding, if it's not safe anymore in tax havens, then I think that by that point, we will realize how effectively that tax haven system is central to the operation of the overall system all over the world. That it's not, if you think of the financial system as being the bloodstream of the economy, then I think you realize that the tax haven is the heart of the system.
Okay, thank you. And yeah, on the long term, the solution is a more integrated Europe, a United States of Europe with the same rules, banking union.
On the long term, we're all dead.
But Europe not, maybe. Or what do we think? Is that the solution? The United States of Europe?
We have, if you see what is happening in the world, you have big parts of the world like the US, the Asian countries who are coming up. If we as Europe don't be integrated, we will have a problem. We could not survive as lonely nations. Well, the first step is set. We have to put it step by step, but constructed on a very critical path, with some times of some crisis and some times of wealth. Now we are in times of crisis, so it's the first shock we have. We have to solve it. But the only way to solve it, in my opinion, is to integrate it more and more. Not too fast too.
Okay.
Thank you. Sorry, Max. Yeah.
And of course, I mean, personally, I can only favor the idea of integration, but what is of course tricky always is that it's sometimes difficult to have these common values. I mean, we're talking about, for instance, more free trade agreements with the US. Again, I mean, when we know that we have different social or environmental standards in the different countries, it's sometimes difficult to have always common ties, and that's the same, I guess, for your former question. Sometimes we know that we have different histories, different cultures also as something which can be accepted in one community in terms of efforts to make, what could be socially accepted. I mean, a socially accepted policy would not be the same in another country. I mean, that was the case with Greece. I mean, every week you could read one story of one advantage of different people, I mean, type of groups of citizens in Greece also. So, I mean, it's extremely, I guess, complicated because of this diversity, and integration helps, at least, and I was backing it in the beginning, of course, to have this common view, but the difficulty is to also have this common view, but taking into account the fact that there are different values and there are diversity of ways forward also. So that's just to balance it.
Yes, we have to deal in Europe with different cultures, with different languages, with different religions. One of the founders of Europe, but I'm not sure if it was Schumann, but those ones, we started to build Europe to avoid war after 45, and we started with economic reforms to put industry together and things like this. And he once said, perhaps if I had to do it once again, I would start with culture. Of course, not to make one culture, but to make people coming close into each other through culture, through things like this. Perhaps this was the right way to build Europe.
Okay, thank you.
We have the advantage to have so much cultures and history, so we must take that advantage with us. But put your ego aside. I think that's also a message to deliver, I think.
Okay, thank you. Are there some questions? Yes.
I have a question for Professor of Economics. Well, eventually, not by the reason that we are not thinking about it, it's not the fact that it's not going to happen. But eventually, if a country like, I don't know, Portugal or Greece decides to go outside of the European Union, I mean, technically, how traumatic, how seriously, what would be the real problems to create new borders or to redefine the national currency? What would happen with real sector? Is it true that companies would just go outside, or, for example, the liquidity in Portugal, if for an example, would that really be a drama, and living standards would really drop if it's true, or if it's just like a terror image that might not happen like that, and just to disrupt the European Union would eventually be like try an effort and at the end nothing happened. So in technical terms, it's how dramatic is that view? And if not, we could accept that that there were real mistakes at the very beginning, just following the track of what you were saying. And maybe not because we want for the European Union for it to work, that means it's going to work, but eventually it will work. So, and the second question to the professor, the anthropologist, there's a recent publication in France. I forgot right now. I think it was from the group of Bruno Colmant. That they are reflecting about the fact that at the very end, the same fears and the same feelings and the same patterns of human behavior are behind the technical and financial problems. So it's not a matter of the standards, it's not a matter of technical or economic instruments, but it's a matter of human feelings and human fears that are behind the economic and financial institutions. So if you can point in that sense, if there's a reflection that could bring us to a real debate that the economic instruments are just instruments directed by human nature and all what we know, which is greed and whatsoever.
First question. It was me. First question was for me, because there are two professors here. Okay. The old one.
Can you repeat the question?
No. Nice. Your question is about, how severe the decision that would be made by a country to exit the Eurozone would be. Nothing is as severe as social disorder. When you have social disorder, which means violence in the streets, the lack of social order, this is serious. Money ranks second to that. So, there's been 60,000 currencies prevailing before the ones that we are using nowadays. And we see that humanity has survived all these currencies. What I suspect is that if a country would decide to exit the Eurozone, it would be probably in a disorderly way, because I wouldn't see, a quiet decision made by a country to orderly, leave the Eurozone. It would be probably it would probably follow some kind of shock or social, disruption, or maybe some populism, or something would happen that would trigger a monetary exit. What happens when it does happen? You need to introduce a new currency, and then you need at the same time to freeze all capital flows, like they are doing in Cyprus. You need also, to some extent, to freeze the geographical mobility of people, because they should not be allowed to put money, and it goes along with some kind of authoritative organization. I wouldn't call it a military power, but you need at the same time to ensure that social order, that people remains quiet, whereas the substance of their economic savings and economic relationship would be at stake. So it would be turmoil. It means empowering the population. It happened, by the way, in many countries, like in Belgium in '44, after the war. All the notes got exchanged into new notes, so all the people started with almost the same kind sum of money. Of course, it was after a war and not before a war. But so it means that social turmoil and ruin for some people. It also means probably hyperinflation, because everything that you import, and we are living in a world where the opening level to the outside world is quite high compared to what it was before. So it will be a mess, social, military, authoritative, public, whatever mess, during some point in time, and then, maybe sooner than people think, back to normal situation. Because at some point in time, the economy needs to restore its basis. So there would be some kind of new order. But to me, the real threat would be, how do you cope with social order when people get ruined? So maybe we will see what, maybe, we are scaring ourselves by doing what we're doing in Cyprus. maybe we are using Cyprus as a microscope to see what would happen with people, you know, queuing in front of the banks and all these things. And maybe we see what can happen if suddenly money loses its symbolic value, or money disappears, or banks are closed, and which would be the same effect as changing currency. So, turmoil.
I will answer. I'm not aware exactly of that, the thesis of that group around Bruno Latour on these issues, but I will answer your question in two different ways. The first one is that just imagine that you have two football amateur teams who are converging to the field where they're going to have a match. And just imagine the atmosphere and the two coaches, they express their very low opinion about the other team, and these guys are so stupid and so on, and we're going to win very easily. There's a real competitive feeling. There's a real rivalry between these two teams, and they aim at destroying each other. And just imagine that when you get to the field, they realize that one of the goal cages has been capsized by the wind, and that you cannot really start the match before this has been solved. In reality, we know there won't be any problem. All the players will go together, and they put that together before even the match starts. And this is the way I use that as a metaphor of the species we are. We put all that emphasis about competition, how important it is competition. You need to be a rival of other person. All companies are discussing just issues, their business plans in terms of market share, and so on. But when you look at the reality, we are a social species. We work in solidarity all the time. When we are in traffic jams, we couldn't solve any of the problems if we were not making solidarity prevail on everything else. Everybody would be locked there together all the time, forever, if we had no solidarity. We have that representation that our societies work just out of rivalry and competition, but that's not true. And an anthropologist coming from a different planet would be struck by how much we are zoon politikon, as Aristotle said, how much we are a species that works in terms, actually, in solidarity. That's something which is linked to, I would say, to the species we are, the way we are indeed as an animal, the way we operate. But there are beyond that, there are simply things which are just part of the world as we are. When you say to somebody, okay, what do you prefer? I give you 100 euros now, or I give you 100 euros in 15 days' time. People will say, I prefer it now. That's the preference of liquidity that Keynes talks about. Why is it that? Why is it so? If you say to the person, okay, how much would you want if I tell you that it will be in 15 days' time, right? How much would you ask? And the person would say, well, for 115, I would go for it. And that 15, in addition, for having it in 15 days instead of now, that would be the equivalent of what we charge as an interest rate. We pay for time, we pay for delay. But that has actually nothing to do with the species we are, our psychology or sociology, whatever. That's because we are in a world where there's time, and the present is something more valuable to us than the future, and that's the way we are. So we have these two constraints of what species we are, how we behave as a species, but also the other constraint is simply that we are in a world that has 3 dimensions, and there's a dimension of time, and that we cannot put that between brackets. That's the way things work around it. And we have to find ways where we do not deny, I would say, physics when we try to find problems either.
Okay, thank you. Another question? Yes.
I would like to take the control issues to what we said about Cyprus and do you think it's completely stupid decision that has been made, as you said? Or is it possible that such a decision has been made public because they want people to react on it and say, enough is enough? We cannot more speak about solidarity if we let everyone do his own play and requesting damages of the wrong management being paid by others. Because if we continue letting nations decide on their own, on the fiscal side, on the nationalism, on the protectionism, we cannot afford to continue to pay for mismanagement of funds. The price is too high. And then I feel that in Europe, it's very important that we are able to say to people, put your house in order first. And if your house is in order, then, of course, we will be prepared for solidarity if something special happens.
I would not share that point of view, because I think that if we want to put some morality in the decision that was made, then we should look at our own country first. You know, we in Belgium, we have a public debt equal to 1 year of GDP, plus another 40% of GDP, which would be the discounted value of future pension commitments. And then in a country like Belgium, we should do the same. We should do the same and capture deposits. Yes, okay, but if we do that, it means that that's another world. It's a world where we think that savings must be captured. It means that private property loses its weight, its validity. It means that somebody who was lucky enough to invest into real estate or gold or equity will be relieved from capturing its own savings, whereas the normal guy who puts his money at a bank will be captured. It means that the whole social equation will be at stake. And I think it will be also social turmoil. I think that what is unfair in this Cyprus thing is that if a country needs to contribute to its own bail-in or bail-out, it's self-speaking, it makes sense. But then why targeting only the people who made the safest investment, that is putting their money in a bank account, rather than whereas all the people escaped debt? Somebody owning a piece of land in Cyprus is not hit by the measures being taken. So there's a question of social justice here. And I don't think that, and I think that the European decision was a wrong decision made by, I dare to say that stupid people, because it's not because they run us that they are intelligent people, stupid people that have mixed up morality, business, who made quick decisions at the end of the night, when everybody was tired, instead of without thinking of the social consequences. And if a country needs to, if one needs to roll out this kind of measure in a country, then it means that the concept of private property would be globally assessed and not only the bank account. So to me, it was the one mistake that I would never have dreamed that one would. The worst one, the worst of my nightmares. And you know what? It happened.
Bruno, I would like to draw your attention to the fact that we could say they were stupid because they made a kind of on-the-spot decision and they didn't think about it and they were very tired and had come by plane and so on. But this is the position that had been defended for weeks on end already by the International Monetary Fund as being the approach to take. So again, it didn't come as a surprise. It's just that that position, Mr. Wolfgang Schäuble aligned himself. He made an alliance with the European Central Bank and with the Monetary Fund against the European Commission that was against that position. So it's not something that was invented on the day by accident by tired people. It's what the International Monetary Fund, which has a terrible record on many issues. As we know, the International Monetary Fund, along with the World Bank, have been recommending for nearly 50 years now policies that have brought life expectancy and education level down in the countries where they recommend their solutions. So these are, what is the word in English? No, récidiviste in French. Is it something, a word like that? But I mean, these people have done that all along. It's not an invention just from now. They've been recommending policies of that type. As you say, attacking the people who made the safest decision to have the money in the bank, they attack them and they let the people who have invested in speculation that these people are going free by now.
Okay, thank you. We have to stop here because some students have to leave the aula for the next lesson. So thank you, the panelists, and thank you for your attention.
Bon,